Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Tuesday afternoon, we have Coffey, market strategist at TD Ameritrade, to discuss Nasdaq-100 performance, trends in the Nasdaq volatility index, what we call VolQ. We'll also take a look at how markets have been responding to the inflation data from this morning. Alex, it's great to have you with us. Welcome to Trade Talks.
Yeah, thanks for having me, Jill. Hope it's been a bit of a good day so far. Excited to be here and talk some Nasdaq.
Yeah, it has been an interesting day in the markets, to say the least, in September proving to be the historical volatile month that it is known for. I want to take a look at a couple of charts with you. We'll kick it off with Nasdaq 100 levels to watch, as well as VolQ. What are you seeing from a technical standpoint?
Yeah, and oftentimes I think that this stuff within the technical space can be quite daunting. And so I wanted to make things quite simple and make this as easy to digest as we could. So Jill, what I looked at here is I kind of set up 3 different levels, all round numbers, less about precision, more about areas, how I look at markets here, and set it up almost like a traffic light. So if we look at the Nasdaq 100 chart, we've recently ran out of momentum near the 13,000 point mark. And so I marked that with the red line that you see on the chart, representing sort of the stoplight. Hey, this is where resistance has run out. We've watched markets take on a new attitude throughout 2022, which is one that wasn't just buying dips, but also consisted of selling rallies. So a little bit of a stoplight there, just of if you're invested in things, maybe just to be a little bit more wary as we approach those higher levels of the recent trading range. This particular chart is actually just going back 90 trading days, where each one of these candles represents 4 hours. So it's a little bit more condensed, but with a little bit higher volatility. I think it's more important than to kind of zoom in on that time frame and look at more recent trading action. The middle line, yellow, kind of your cautionary line, is sort of where we trade now, is near this 12,000 point mark, sort of the no man's land, if you will, off of the recent trading action of the last 90 or so trading days, Jill. And this one kind of is just telling you to slow down. Maybe if you're looking at this from the bullish standpoint, possibly still some room to go to the downside, but also maybe not quite time to panic just yet either. Looking for this as maybe a level where we could see buyers come in, but not completely sure. And then, of course, the green line, sort of the signaling the go point, as we do for when we're driving in our cars. This is down at near those lows that we saw for the year on a year-to-date basis. That's right near that 11,000 level to the downside. So of course, none of this is guaranteed or indicative of what would be to happen, but sort of that kind of contrarian mindset of how to approach markets. Of we're told to buy low and sell high oftentimes, Jill, but in actuality, we don't tend to do that. We tend to do the opposite, which is kind of sell near lows and try to buy into these rallies. And so kind of thinking about it from a little bit different standpoint.
Yeah, the psychology of the market is truly interesting, to your point. Let's talk about VolQ for a moment here, the Nasdaq 100 volatility index. I want to go back to that for a moment. Any clues that you're seeing there that could potentially suggest a bottom out, to your point, or a little bit more chop in this market?
Yeah, this is a really interesting chart, I think, to look at here. So same time frame, only going about 90 days back on this particular one. But I made this one a line chart just so it's a little bit easier to see. Obviously, when we're making year-to-date lows and there's all the uncertainties, we all read the headlines, be it geopolitical, be it economic-related data points, earnings, whatever it may be. There's plenty of reasons for there to be uncertainty. And if you go back to kind of the depths of, I guess, the first half of this year and sort of coming to a point in June, it's no surprise that we see that as the highest point on this chart, looking back over the 90 days, where we saw VolQ peak out near 40. But as the summer rolled on, it was almost as if the start of this second half of the year, Joe, was completely different to the first half of 2022. A lot more optimism seemed to kind of spill in. Maybe it was just exhausted selling. Maybe it was hope that a Federal Reserve was closer to the end of its tightening cycle than the beginning, and ultimately maybe some of those soft landing hopes were to come to fruition. We saw a pretty vicious rally off the lows, leading to suppressed volatility through most of the summer. But as we kind of roll into the start of a new school year here, football is kicking off as well, and we're into those fall months again, and our eyes maybe are refocused on the markets. Some of these uncertainties have proven to be a little bit longer lasting than maybe some had hoped would be. And maybe some of that uncertainty doesn't seem to dissipate any sooner. I know we're going to talk inflation data in just a little bit, but that seems to be a problem that just doesn't seem to go away. And so I'm not surprised as the market has sort of stumbled here that we're starting to see an uptick in volatility. But I do think looking at this chart, it puts in perspective that we're nowhere near those feelings of fear that we were, just a few months ago. But we're also not in the calm forces of sort of the latter parts of July, early August either. And I think knowing that, combining that with sort of the yellow line or yellow light kind of analogy I was looking for on that NDX chart, this kind of just highlights that, we're in this sort of no man's land right now, and approach that with that in mind. And I think knowing volatility can certainly go higher from here, but it's also, of course, not on its lows either.
Yeah, it's so interesting, Alex, because going into the inflation print yesterday, stocks were up pretty significantly, and the VIX and VolQ were up as well. So kind of was a little bit of a tell there that you weren't quite trusting that rally, and certainly that played out today. Let's spend a quick minute on the heat map here. We know stocks are red across the board, but what are you seeing in the heat map with those more red than others?
Yeah, what I thought was really interesting on this, Jill, is normally you have, these broad-based selling kind of events, and one or two names will stick out as sort of outperformers, be it they're tied to something that benefits from whatever the reason the market is going down or whatever it may be. Today's not that day. Actually, in the last check that I had and looking at it here in real time, we had 0 of the Nasdaq-100 components higher. Those aren't days that we often see. And so whenever you're looking at this, I think the heat map can be a good visual aid. Of course, the brighter the red here, the more intense the selling is, but you don't really distinguish that as much here. Obviously, any day that you have Microsoft, Apple, Alphabet, Facebook, now known as Meta, Amazon, Tesla, all the big names as sort of your brightest, biggest rectangles, it's just a matter of math. It's very difficult for the Nasdaq-100 index to outperform when, the components that make up, nearly half of it are doing poorly. And so I think this is best illustrated by Apple. Apple, of course, was very, very strong yesterday. It was a very nice day for the Nasdaq-100. Apple giving back a lot of those gains here today. No surprise. Combine that with some of its other mega cap tech peers doing poorly, and actually all of its Nasdaq 100 peers in the red. It's no surprise that the index itself is sliding quite substantially.
Right. All right. And to wrap up here, Alex, we got the inflation data. It was clearly off, and we saw how stocks are responding to it. Were you surprised by the magnitude of this move? We know the data isn't going to be good. It wasn't that bad, but there was no improvement. And I guess that's why the market is reacting the way that it is. Do you feel like this is a little bit of an overreaction, or do you think it's in line with how investors feel about it?
Jill, I think that's a really, really, really good question. And of course, there's no perfect answer to it, but I would say that I'm both surprised by it. And I think anybody who says that they're not surprised by at least the magnitude and kind of the visceral quick reaction that we saw. I mean, of course, the Nasdaq is trading near its lows at the current moment, but it was down instantaneously if you looked at the futures market in response to this morning, and it's continued to slide all afternoon long. And so I am not surprised by the direction of the reaction, but the magnitude, I think, undoubtedly is a surprise. Is it an overreaction? I think possibly, in the sense that you look at what some of this data is suggesting. A lot of it is things that we already knew. I think the core number within the CPI print, which suggests some of those more, longer lasting components of inflation, were a little bit more sticky and a little bit higher than expected. I believe it came in at 0.6. That, of course, is a little bit alarming, particularly for those who are looking for that pivot from the Fed. This isn't the data point that's going to get that. But at some point here, you look at some of these components, owner's equivalent rent, they just don't seem to, be entirely indicative of the real situation on the ground. If you look at, kind of rental prices across, we've known these are going up. I don't think there's anything in here that's a surprise. I think the shock of the miss is a surprise, especially when they were looking for the headline print to be actually a little bit deflationary month over month, and that didn't happen. So I'm not surprised by the direction. I am surprised by the magnitude of it. And it's probably a little bit of an overreaction, Jill, but I think we also have to keep in mind that this market just rallied a ton, kind of thinking they understood this situation. So anytime that we're surprised and it changes the dynamics, you look at the Federal Reserve kind of hike odds, they've shifted now, starting to lean towards a possibility of 100 basis points. This wasn't even in the conversation a week and a half ago. So there needs to be some reaction. Ultimately, whether it's an overreaction remains to be seen. But given the run up over the last few sessions, I think that we set up a situation where this was certainly a possibility.
All right, Alex, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.